What's up, guys? It's Jack, and I just read this article that was titled, "Should You Really Invest Your Money in the Stock Market Right Now?" This is what history suggests, right? So I just wanted to react to this article because I'm sure this is a question that a lot of people have out there. Should I invest my money in the market right now with all this uncertainty and fear? And, maybe we're going to go into recession. Could it go lower? And I'm also going to go into, what history has shown previously, and if it's been, a good time to invest when times of uncertainty in the past has happened, right? And then we're also going to talk about some of the psychology behind all this. Because as I mentioned, right, I mean, this can be a tough time. If you have your life savings invested into the stock market right now, which is down, overall 15, 20%, and depending on which stocks you might have been invested in, it could be even worse. That's scary, right? To go from, let's say, 100,000 to 60 or 70,000, right? Like, just like that, you lost 30, $40,000 of your net worth. And obviously, if you have even more money invested, it's even more scary. So that's what I'm going to discuss. All I ask for you to do is like this video and subscribe to the channel for more content like this, and let's get started. Okay, so when it comes to the question, should you invest your money in the stock market right now? My answer is yes, and it's not just my opinion either, okay? Because all we have to do is just look at history and look at the past, right? And there's never been a time where there's been a recession or there's been, some black swan event or the financial crisis or whatever it's been where it hasn't been a good buying opportunity. I'll pull up a chart here where you can see recent dips in the market, and when you look at it, it honestly just looks like a little blip in the entire market. I mean, during those times it seems like the end of the world, but when you look at it over 10, 15, 20 years, it's like, holy smokes, like that was just like this little dip in the market compared to the grand scheme of things. I mean, let's go back, right? We can go back to the dot-com bubble, which was arguably one of the worst crashes ever, right? And that was a good buying opportunity, right? I mean, even if you didn't time the bottom perfectly, if you kept buying and you kept buying and you kept buying and you kept dollar cost averaging the next 3 or 4 years, 5 years, right? It was very, very bullish. You could have made a lot of money. And then we go to the 2008 financial crisis, right? I mean, this is what is always on everybody's mind, whether or not that's going to happen again, right? But if you look back, again, that was a good buying opportunity. Now, I will say it took a long time to come out of that one, right? I mean, I think before we actually, went back and tested the all-time highs that we reached previously before the crash, it was like 2 to 3, maybe even 4 years. But this is where you really have to be savvy when you invest, right? You just don't put all your money into the stock market right now and assuming that you have more income than debt. You have the ability to keep buying and keep buying and keep averaging down. So, for example, let's say the market's crashing down like this and you buy some here, but it keeps going and it keeps going. Now obviously you have to come all the way back up here to break even. But if you keep dollar cost averaging, your average keeps coming down, and then so when the market finally does recover, you are becoming, break even and profitable a lot faster, right? And then we can go into all the other scenarios too. I mean, look at, COVID. Another great buying opportunity. I mean, this was a buying opportunity of a lifetime because we had a V-shaped recovery after. It was a huge crash, and if you just didn't buy into the fear and you were just like, wow, these deals are too good to be true, and you just kept buying and buying and buying, holy smokes. I mean, millionaires were made in that market, and quickly, though, in that scenario, because it didn't take 2 or 3 or 4 years to come out of that one. It took like a year before we made new all-time highs and surpassed that by a ton. I think you get what I'm saying, and what it really comes down to is that bad news is an investor's best friend, right? Like, if you're an investor, you want to buy these companies at a discount. Like, why would you want to overpay for a company? Take this for an example, right? It's like you're going out to the store and you want to buy, let's say, a t-shirt that is Ralph Lauren's, and typically it costs you $100, right? And they're having a flash sale and it's 50% off, right? If you've been wanting that shirt, you're probably going to buy it, right? Because you're like, okay, I'm going to buy it now because, a month from now, they might not have this sale and it's going to be $100 again, right? It's like the same scenario with stocks, right? When they come down to these, enticing valuations, And as long as it's a good company, obviously, I mean, you're not buying like some like unknown penny stock. We're talking like good, solid companies that we know are going to be around for a long time. You're just getting them on a discount. That's all it is, right? Like, for example, Apple stock not too long ago was like $225, right? And now it's trading under $200. Would you have rather bought an Apple at $225, or would you have rather bought it at, under $200, right? Like, if you wanted to own Apple anyway, why would you be scared to buy it now at a discount when you were considering on buying it when it was 225, right? I don't know exactly when it's going to be, but it will go back to 225 and probably way higher, right? We know that. It may take 1, 2, 3, 4, 5 years. We don't know how long it will take, but right now, things are discounted. Here's another great example of bad news being an investor's best friend, right? Look at Meta or Facebook, right? Back in 2022, this stock was trading, I think, at like $87. I'll pull up the chart here for a second so you can take a look at it. It was trading very, very low, all right? And this is where, it kind of comes down to some of the psychology in this, right? When you have these big losses, it's really, really tough to stomach it. I mean, it makes you queasy, it makes you sick, it makes you sad, it makes you upset. The list goes on. It just really, really can take a toll on you emotionally, right? And I guarantee you, there were some people that were invested in Meta or Facebook at the time, and it just kept falling. It kept crashing on all this bad news and things that were going on with the company and this and that. And they probably sold out, sold for a loss, right? And now look at Meta. I mean, it is arguably one of the strongest and best companies to buy in the entire market right now. I mean, it went from, under $100 to almost $800. That's 8 times your money. Let that soak in, right? And if you were buying into that company when people were fearful and selling, guess what? You're the one that made all the money. And it sucked during that time though, right? Because again, we're never going to time the bottom, right? And so you start putting money into this company and then you're negative right away, and it just keeps going down and down and down, and that's hard to stomach, right? But that's where I wanted to talk about the psychology of stocks, right? And investing. And you just have to have a long-term outlook on these companies. As long as they're good companies that are going to be around forever. I mean, look, like, do you think Apple is going to be around 5, 10, 15 years from now? I say yeah. What about Microsoft, Google, Walmart? You think Walmart's are going to be around, 5, 10 years from now? All these companies aren't going anywhere, and they're going to continue to grow. And as long as the companies are growing and becoming more innovative with AI and this and that, guess what? They're going to grow revenues, and that's going to increase the price of the stock. So is it a good time to buy into the stock market right now? Absolutely. Absolutely. And I know it sucks. I know it's hard to like wrap your head around. I'm not going to lie. I'm in the same situation too. I mean, if you're invested in the market from where you were a few months ago to where you're at now, it does not look pretty. And to be like, I'm going to put even more money into the market, I mean, it seems insane. But look at Warren Buffett, one of the arguably greatest investors of all time, right? He says to be greedy when others are fearful, okay? And right now, people are extremely fearful. I mean, I looked at the fear and greed meter, not too long ago, and it was at a 4, which I'm pretty sure was as low, or if not lower, than it was in the 2008 financial crisis. So you want to talk about a time to buy, this is it. And I'll be the first to say, I mean, the stock market obviously can keep going down, but this is why you got to have a plan, right? You want to dollar cost average into great companies, okay? So you just say, hey, I'm going to put $500 in every paycheck. Whether the stock's up, whether it's down, that's your goal. Hey, $500 is going into the market every paycheck. And don't even look at the market. Just find your companies that you want to invest in, put your $500 in there, keep working, keep making more money, put another $500 in there, keep dollar cost averaging, right? And I promise you, once the market finally finds a bottom and starts to recover, we're going into another bull market for, 2, 3, 4, 5, 6 years. I mean, bull markets are so much longer than a bear market. And I don't even know if we're, technically we're in a bear market right now when it comes like to a percentage wise. At least we are in like the NASDAQ. I think the S&P 500 is like right on the cusp. But nonetheless, like, you get what I'm saying. We're going through a downturn right now. You don't get many opportunities like this to buy stocks. And that's what you have to remember, okay? You're going to look back 10 years from now and see some of the prices that these stocks are at. And I promise you, you're never going to be able to buy that stock for that price again. And that's the mindset that you have to have. It has to be a long-term mindset. Don't pay attention to, how red your portfolio is. Believe me, I'm guilty of it. I do it all the time, but the longer I do this, the more I realize it doesn't help. It doesn't help at all, right? Just forget about it. Stick to the plan. Keep buying is the idea, right? You buy stock and it goes down, buy more. Buy more as long as it's a good company, right? Because again, we don't get many opportunities like this, and we can look in the past and see that history suggests that the market is going to go up in the long term, right? We know that. You can just clearly look at the chart, and these what seem to be like really big dips in the market just look like a little blimp in the overall grand scheme of things. So keep that in mind. I hope you guys found this video helpful. Let me know what you think in the comments. Do you think it's a good buying opportunity, or are you sitting on the sidelines? I would love to know your thoughts, and I'll see you guys in the next one.